Good afternoon, everyone. I'm recording this video for your AAT bookkeeping transaction practice assessment 2, and this is a feedback uh, to explain to you how would approach these kind of questions when you get in the exams. Important things to remember here. You have 1.5 hours for this exam. You got 10 tasks, so we're trying to get that done as quickly as possible and see whether we can get done. Some good response to this video, and obviously to embed you with some exam tricks what you can do to manage your time, and then obviously to get the bottom of the challenges they have posed to you in the exam. So the first question we have now here, it is going to be from CVL Limited, to CVL Limited from Johnson Jones, a quotation there, and then obviously a sales invoice. So goods are being already sold, and we are going to provide a sales invoice to the CVL Limited. They are your customers, Johnson Jones. It is the is yourself. Okay, so here they're looking at it. They have on the quotation saying 2,000 unit of L29, and their value at £31 and 35 pence for a set of 30. So when they ordered 2,000 items, what is the best thing you can do is find the value of one item. They didn't say they're selling in a batch of 30. You must buy them on a batch of 30 now. They just give you a quote price of 30 items. It's going to be 31.35. So 2,000 is definitely not a multiple of 30, but it still can, cover the whole of that unit. So you simply have to find the unit value for one item. So what we're going to do to find the value of 2,000 items, you're going to divide £31.35, and then obviously you're going to multiply that by 2,000 again. So what we're going to get that time, you will have, let me just check it for you quickly. Okay, so you're going to get 2,090 there, and to find the VAT 20%, multiply by 20%, you get 418, and then the total value is going to be £2,508. Okay, so how I found this one, I use a calculator in the system. So you're going to divide this amount by 30 to find the one item price, which is going to be £1.045, multiply by 2,000, you should get that one, and then again find the VAT by multiplying 20% here, and you should get the total value. So now this is a sales invoice. Which book we're going to be recording this into? This will eventually go in the book of prime entry. The book of prime entry will be sales table because it's a sales invoice. If it is a purchase invoice, it will be going in your purchase table, and if it's a credit note, they will go into their appropriate credit note. So here they will ask you to choose who's that. Is that CVL or Johnson? Yourself, if you're Johnson Jones, CVL Limited is your customer. You choose that code, and then obviously you're going to say CVL 12, and the total is going to be whatever the amount you have there, and VAT is going to be £408, and then 2,090 would be a net. So if you remember, the net is before the VAT added there. So therefore here this will be posted on the further column, the VAT added, and the total will be in this one. Now they're also stating the Johnson Jones are considering offering its customers a prompt payment discount of 2% for the payment within 10 days. What would be the amount CVL Limited would pay to settle the invoice in A if they paid within 10 days and took the prompt payment discount? So we need to find out what is the 98% of it, because the discount, if it's 2%, the rest of them will be the amount they're going to be paying. So if I say my invoice is £100, the 2% discount is going to be £2, and the rest is £98. That is a lateral way of thinking to find out the discount. So all you need to do, divide by 100, multiply by 98, or divide or multiply by just 98%, and you should get the value of the invoice. So let me just go back into my calculator. I'm going to multiply by, get that one, and then I'm going to be multiplying that by 0.98. That is going to be giving me 245784, 2457.84. 2457.84. All right. Now they have given you something called a statement of account and a remittance advice to show for, what the amount has been settled. So this is the sales ledger account of CVL Limited and the remittance advice received from them. So no prompt payment discount have been taken. So we're going to simply consider what was the invoice and what are the credit notes and how much the money were paid before, and then also we need reconcile to say what has been included and what has not been included into my uh, um, remittance advice. And also remember, show which two transactions have been paid incorrectly or have been included in the payment by placing the relevant transactions in the appropriate column. So paid incorrectly. So if you look at that here now, on your statement, you have an invoice for the value of £3,525. But here on the remittance advice, it says £3,225. So that is not being paid correctly, isn't it? So therefore, we're going to find out how much is that invoice, and we're going to simply we're going to add that here, paid incorrectly, and then also to find out much they should have paid initially anyway. So if you look at that balance here, this opening balance and these two balance will reconcile each other. Why? Because if you look at that credit note, if you take that away from that amount, you should get the amount banked for £1,048. Why? If you add these two, that will even out this amount. So we only have these four invoices to consider. So we already decided this was paid incorrectly. The other two, like £390, it has been already accounted for. 2,978 is also accounted for, and this is also we accounted for, even though it was paid, but it's paid incorrectly. This invoice number 1252 for the £1,118, 17th of February, that is not included on this remittance advice. So that is not included in the payment. So what we're going to do, look at that invoice number 1252 and then just put it down there. And that's all it is. But it's only 2 marks for that one. So let's move on to the next question. The next question is question 1.2. So you have a credit note there and goods received note. So credit note, goods received note below relate to incorrect goods supplied to Hawkins Limited on 1st of April 2000XX. All right, so now we're going to look at it here. We won't identify two discrepancies in the credit note. So on the goods received note, the following goods has been received into our warehouse from JTS Limited. So that is fine. 90 items, item number 310002 at 2.05 per item. Action, goods are as returned as goods are not as ordered. Okay, so here if you look at the credit note itself, you have 90 items. We have the amount there, the item number 310002, that is also fine. The amount is also correct, but let's see whether there is an incorrect information there. All right, so let's have a quick look at the calculator to check whether those calculations are correct. So I'm getting my calculator out there. 2.05 multiplied by 90, that should give me £184.50. So your net amount is also fine. Okay, but how much is the VAT? So therefore we're going to multiply that VAT. To find the VAT, we're going to multiply by 20%. That should give me £36.90. Okay, so if I have £36.90 here, it's got £39.60. So your VAT amount is incorrect. So if your VAT amount is incorrect, how much it should be the total amount, how much it should be. So we're going to multiply this by 6, or we're going to add the invoice value together. I will be getting £221.40. Okay, that is also not recorded correctly. So here I'm going to put it down as that value is incorrect. So there are two, the totals were not right there, VAT amount and the total amount. So we just got those two calculated. Okay. Now let's move on to the next one. The credit note below has been received from another credit supplier, and they're asking you to select the correct day book titles and enter the credit note from bar PLC, totaling the total VAT and net column. So again, you have to ask yourself a question, because the credit note was sent from a supplier. So a supplier, how they're going to be doing is going to be mostly like your purchase from there. So if they give you a credit note, that is possibly a purchase returns. Okay, unless it is something saying here as a prompt payment discount. So normally a credit note can be given for the goods return, or if I have taken advantage of a prompt payment discount offer for my suppliers and have paid the net, not net amount, the taken advantage of the prompt payment discount, I paid whatever the rest there, and then they will give you a credit note. So example, if I have been given an invoice of £100, they given you 3% prompt payment discount, I will pay them £97, and the supplier in turn will send you a credit note for the value of £3 here. So here, this is going to be what for us? The prompt payment discount was received. We received that discount. We didn't give it to them. We received that discount because it reduces the amount we paid towards our debt, our creditors. So here, the book will be in that scenario, discount received day book. And then again, we're going to put down here the total of £33.24. The VAT is going to be £5.54. And the net amount is going to be £27.70. So we got all of those information recorded here. Now all you got to do is find out, but I'm going to show you a trick now. All I need to do is calculate this net, and then everything else you can use your calculator to multiply and divide, and you find the rest of the information. You don't even have to individually total them up. So I'm going to bring my calculator quickly. £45 plus £28.50 plus £28.15 plus the last one is £27.70. So altogether it's £129.35. So I'm going to write here 129.35, and then I'm going to find out the 20% of that one, which is going to be a VAT. So I'm going to multiply by 20%. That is going to give me £25.87. And then I'm going to multiply this again by 120%, or 6, multiply by 6. Okay, easier is multiply by 6. £155 and 22 pence. I didn't even bother totaling these columns, but even if you total those columns, you will get the same answer as it is here. Okay, it saves a lot of time if you learn a bit of a shortcuts like this way. Get a cup of my tea. All right, excuse me. Jocks PLC has received the statement of account below from a credit supplier that offered a 2% prompt payment discount for payment within 14 days of dated invoice. Today's date is 30th of June. So please tick on the next to the 3 transactions in the statement from which the prompt payment discounts can be taken. So they're saying 3 transactions. That also already given you a time limit and the number limit as well. So here, if I look at that now, can you take advantage of that invoice? Can you take an advantage of that invoice? Can you take an advantage of, that's the question you ask. But rather than that, I can go from here, from the date, which is the 30th. I'll take away 14 days from there. The net is going to be 16th. From 16 onward, any invoice being issued, I am within the 14 days of that invoice to take advantage of the prompt payment discount. So if I know my time there, If you notice that here, these 2 days are right in the middle of it. So obviously these 3 invoices, I can take the discounts. These I can't, because if I look at 15th of June, add 14 days to it, it's going to be 29th of June. The date is already expired if the date is 30th. If they say it is going to be on 29th, I still may have a chance. But here we don't. Okay, so this scenario is the date's going to be the latest of those, and that will allow you to take the discount. And then again, this is a supplier's account in the purchase ledger, and we're going to look at some other options. What is the question they're asking now? Check the accounts, so supplier's account against the statement of account in A. Identify 2 differences. Again, they want you to find out some sort of a discrepancy there. So let's have a quick look at that, shall we? So first one, we have the balance brought forward here, and these 2 invoices, they cancel in the bank amount, and the credit note will cancel the opening balance. If you notice that here, if you add these 2 together, that will be that amount. That is something you need to eliminate first. Okay, and you also need to learn about what if they don't match. You will find a one in certain type of questions, but this is not a right example to go through it. Now let's go through this here. Now there is an invoice for value of £198, which matches. Okay, so I can take that off. And then there is another invoice for 6,000, what do you call it, 738 here in my supplier accounts, but on the statement it says 6,378. So I know for a fact this is not matching. Okay, so what we need to do, we're going to use this information here, 1585, invoice number 1585, it is not matching. Okay, so that is an error. And then we're looking at 761 invoice number, it is there. The invoice number 1593, yeah, for the amount of 761. And then 3,116, it is also there. 642 is still there, and 1,042 is still there. So everything is there. One of them is not have the right amount. But look at the first invoice here. This invoice for £319, 1546, it is not showing in my purchase ledger. Okay, so that is definitely a discrepancy. 1546, I'm going to choose that as the transaction missing from the supplier's account. So I'm going to move on to the next one. The invoices below were received on 10th July from credit supplier that offer a prompt payment discount. So if you look at those now, they will tell you what are the dates and the invoices are received and the terms of the prompt payment discount. So in this scenario, the terms for the first invoice is they will give you a 3% prompt payment discount if you pay within 10 days of invoice. So if you pay within 10 days of invoice, the date is going to be 19th. It can't be 20th, because from that date of invoice, you add 10 days to that one, that will be the 19th. Okay, and then obviously for the next one from a Crown PLC, 9th of invoice to 14th, that is going to be 23rd, because you're going to add 14 days to that one. So that will be 23rd of July. Okay, and also now we have to find the amount. So the 3% prompt payment discount, they want you to calculate the amounts to be paid to each supplier if the discount is taken. So they don't want you to calculate the discount. They want to calculate how much is the amount after the discount. So if you have £1,056 here, so 1056, that is the total amount of invoice. If you take 3% out, multiply by 97%, which will be 1040, so 1024.32. So 1024.32, and the next one is going to be £792. And if you've taken 2% off the discount, and that gives you 98%, we're going to multiply as, so 0.98, 776.16. So £776.16 will be the amount. Okay, now let's move on to question number 4. Question number 4 dictates we have some information we need to enter into cash book. Again, remember, this is the credit side of the cash book. If the credit side of the cash book means what it is your payments. Okay, the payments will all go on the credit sides, the receipts will go into the debit side. Debit side is money in, credit side is money out. It's another way of remembering how and how to enter those transactions, and obviously it's going to be helping you with how the analysis columns work once you enter the initial entries. Okay, so here they're looking at on 12th of August, they have paid Sandhu Supplies a purchase ledger account. The amount is £673. The many times students get it wrong in this type of questions. What they do, they calculate VAT for this. Why you shouldn't do that? Because this is a credit supplier. If you own the purchase ledger, that means it's a credit supplier or a customer. If you look at it on the debit side, they will say credit customers or the sales ledger. They already recorded the VAT when the transaction initially occurred a while ago. The day books will have the VAT recorded now. Now the transaction is only at the last phase of it, where we are settling the debt to the suppliers or we receive the debt from the customers. So in this scenario, VAT is not required to be recorded. So because it's a check stub, this check stub is going to go in the bank side of it. So I'm going to say 763 there, and obviously here I will say it is under trade payables. Next one, again we have one more, Pen Limited, so we choose Pen Limited here, and then also the similar thing, because it's a check stub, £299, and this also will go here, £299. And last but the least, we have a cash transaction. That means it is a cash receipt. That means you have paid for it, and whoever you pay the money to, they gave you a cash receipt because the goods were supplied. Yeah, and this will go as they don't have a name here. What is this goods for? Goods supplied. So the goods were supplied to them. So it is possibly, we can say, cash transactions. Yeah, I think so. Let me just quickly confirm it anyway. Give me a second, please. Let me confirm it. No other way to put it down there. Yeah, because oh, sorry, this is the course limited. Okay, so the course limited is your person who sold the goods to you, so we can just put that down there. But this time this is going to be cash, so it's going to be £390 we paid. But now you have to account for VAT because it's the first time this transaction's been recorded in anywhere in our day books. Okay, cash book is also part of your day book and your double entry if you chose to be. Okay, so in this scenario, I'm going to get the calculator out. £390 divide by 6, and I'll have a VAT amount of the value of £325. Okay, so this is how these entries are recorded. Also remember the difference between you need to record for VAT because the cash, sorry, any settlement from your trade payables, the one you're going to pay your trade payables, you're simply going to record it this as no VAT required in there because the VAT is already been accounted for your the transaction in your purchase day book at the beginning. So all you need to do now, just start to total these columns. So I'm going to say 998 there, 1 there. So it's going to be 116 plus 25, 2 there, 10, 9, 1 there. So it's going to be 58. I think that is the amount, but let's check it anyway. I'll calculate it. I'm using my mental math there, which sometimes can be your greatest of strength. Sometimes it will be a chink in your armor. All right, 29580 was confirmed. So it is going to be 65, and then it's going to be 300 means 972, 972, and here 325 pounds. So whatever transactions you have entered, this will be recorded accordingly. And these analysis columns, that is what most important, because they are entered on the credit side of your cash book. If you ever get a question, all these balances will go into debit side of the relevant T accounts. For these accounts, they have VAT account, trade payables, cash purchases will all have a debit entry, excuse me, from the cash book. Next question. An organization keeps an analytical petty cash book. So they're going to have analysis columns on their petty cash book. That means the information you enter on those sites will be eventually moved into general ledger as the part of your double entry. Okay. So on 30th of August, there was one final petty cash payment for the month to be recorded in the petty cash book. The amount of £31.74 included VAT had been paid for advertising expenses. They're asking you calculate the VAT and the net amount to be recorded in the petty cash book. So you simply have to do the old trick of dividing the amount they have given you, £31.74, divide by 6. Why? Because your VAT is only 20%, net is 100%, your total is 120%. So to calculate the VAT, I simply say, if they're giving you the gross amount, divide it by 6. If they're giving you the net amount, divide it by 5. It is easier to remember that way. So I have got the VAT as £5.29, and I'm going to multiply this figure by 5. It is going to give me £26.45 for the net column. Before the petty cash payment was recorded, the amounts totaling of £29.63 had been entered into the advertising expenses analysis column of the petty cash book. Now they want you to calculate the total advertising expenses analysis column after the petty cash payment has been recorded. So you know, whatever transaction you're doing, particularly a cash transaction, you're going to have a total column wherever you pay the cash out, and then obviously net and VAT will go in the analysis column. So this amount here, the net amount, represent what you're going to add to this £29.63. So I'm going to add that to your 26.45, £29.63. That should give you £56.08. Okay, that should be your answer there. Next one is, after all August petty cash payments had been made, an amount of £46.78 was left in the petty cash float. This agreed with the total of all payments now recorded in the petty cash book was £183.22. On 31st of August, petty cash float was topped up to £270. So there is a catch to that one. Why? The impressed amount has been changed. What is an impressed amount? This is the agreed amount you normally keep in your petty cash book as your starting float. Okay, so initially at the beginning of the month, the petty cash had £46.78 plus £183.22. So the petty cash was at £230. But now on 31st of August, they want you to top it up to £270. That means the petty cash impressed amount now increased by £40 to 270. Okay, so you have to remember this can happen. If this happen, all you need to do, you just have to find out how much more you need to put in there. Okay, so if you look at that here, what will be the entry in the petty cash book to record this transaction? So the entry now going to be money going to be coming into petty cash book and money going to be going out of your bank account. Why? That is how it is, isn't it? Because you take the money out of your bank account and put in your petty cash tin to top it up. So for you, in your petty cash book, this will be a debit entry. That is the first thing you're going to do. And the detail obviously going to be cash from bank. All right, because this entry simply states the money will be coming into your bank account. But then now the amount, this is the one you're going to be scrutinized for. If the amount is going to be for £270 and you only have £46.78 left, so I'm going to take away whatever money I have left over from £270, 46.78, that should give me £223.22. Another way to put it, if I know I have taken £183.22 from the float, but now the float is going to be increased by another £40, we need to add the £40 to that one. So the amount is going to be 223.22. So that will be the total amount we need to bring this petty cash flow to £270. And what will be the entry in the petty cash book to record the closing balance? So if I'm going to do the closing balance, because now I have £270 balance in my petty cash book, that is a debit side, isn't it? So your closing balance is going to be on your credit side. We will have a balance carried down figure of £270, 270 pounds. So it says balance carried down for £270 will be on the credit side. What they haven't said you have to do a decimals here, so we can just put the whole number there. Okay. The next one, the petty cash receipts below are ready to be recorded in the petty cash book for September. I don't know why I got November from September. All right, Henry Bagnall, and we got Face Florist and Jaden Traders. So first one is replacing glass in the front door. So what type of analysis column that is going to be going under? So the amount I'm going to look at it here. The transaction cleaning expense, miscellaneous expense, motor vehicle expense, office stationery, premises expense. For me, it's more appropriate for that one will be a premises expense. Phase florist, this is going to be stationery, cleaning, motor vehicles. No, it's miscellaneous expense because it can't fit in any other things. You can put it in your MISC category. The last one is Jaden Trader, paint to repair delivery van. Okay, so what you can do for that one, this is going to be your motor vehicle expense. Okay, so here you may ask florists, why can't they go under premises expense? Because premises expense is something to do with the upkeep of the premises. Okay, it cannot be for like miscellaneous items like a floral display for reception, which only used for a day and then just probably chuck it away. All right, so the amount now we have recorded everything. Now we have to find what is the analysis column will be used to record the payment and the amount to be recorded in the analysis column. So if you look at that again, the total will be everything inclusive VAT. The analysis column will be the net of VAT. Okay, so first part, they have said £36.70 plus the VAT. This is the net amount, £36.70. So I can put that information here. The next one is going to be Face florist, that is going to be £25.56 including VAT. So what we'll do, we'll find the VAT, which is £4.26 they already given you. So what is the net amount? So we need to do take away from that one, and you should get, sorry, £4.26. £21.30. So that will be on your that column. And the last one is also including of VAT. So we're going to find out how much is the net amount. So we take away that £8.36 from your the total one. It is going to be £41.80. All right, now next one. So here they've shown you the purchase returns day book. They're giving you the information here and how we're going to be recording into our general ledger. This question always swirls around, comes down to you on a different way. But easy way to remember how we're going to identify that particular transaction and how that's going to affect your day book or their relevant T accounts. The first part, if you know your purchase day book, you should know the purchase return book. is going to be opposite to that one. So your purchase day book is for your credit suppliers. Therefore, any entry from the total column will go into which side of your purchase ledger control account, because it is a liability, isn't it? Whenever you buy goods on credit, the purchase day book will have PLCA entry into the credit side of that particular entity. It's increase in the liability. So what is the purchase return day books total will go to? You will still go to PLCA, but it will be now going into the debit side of it. Therefore, it reduces the balance of your liability. So I'm going to remember this is going to be a PLCA, but this is definitely a debit entry. Also looking at it this way, your purchases are an expense. On your debt click, your purchase will go into the debit side of your trial balance or your T accounts. So purchase returns, which is the net amount, will go into the credit side of that particular purchase return account. So I'm going to say credit side for my purchase returns, but then obviously the VAT. VAT is going to be always the same side as the net. So if the net amount is going to be, oh, hold on, I put it on the wrong place here. Yeah, because it's going to be in the net amount on the credit side of it. So I'm going to do this, the VAT as well. So if you notice that now, guys, important part is your debits must be equal to your credit, which you have found here. And also the net will be the same side of your VAT. And also you need to remember how to identify which control account is affecting, and then you'll be able to decipher which part that is going to be going under. Now, next one, we have a similar question. This time we have a sales return day book. What I can tell you now, your life is a lot easier, because if you know your purchase return, will be opposite your sales return, you should be able to simply looking into that one and do the opposite entries for here. You're just replacing this by sales ledger control and the purchase ledger control. The other one will be replaced otherwise, but that is a shortcut. But if you want to learn really how that works, on your sales day book, the total will go into your debit side of your SLCA. So on your sales return, this total must go on the credit side, okay? Because this is how it is affecting your T account. And then if that is going to be credit side, the other two entries must be debit side. And then also remember, sales returns means sales is a credit into their T accounts. Sales return will be obviously opposite side of that credit entry, because it is an indirect expense for me. So I'm going to be saying sales and the VAT, which is the easiest part. Now, question number 7. Now we have, these are the totals of the petty cash book at the end of the month. Now they want you to do enter the amount into the general ledger. So what you need to know now, though, these two totals are already balanced. If you notice that here, your debit and your credit are matched already. So there is no need I have to create a petty cash account in this list. But for this, all of these analysis columns, I have to do a general ledger entry. Why? Because these are recorded in expecting of changing this or moving them over to your general ledger at a later time when we closing the account of at the month end or the end of the period. So now here again, as I said, you always put a line across it with which what you call differentiate your debits and your credits. So your credits, whatever you have now, the analysis column entries will eventually go into debit side of their relevant accounts. Why? Because your first entry was made on the credit side of your petty cash book. So if that is an entry made on the petty cash book on the credit side, all of these accounts should have a debit entry. So I'm going to say debit, 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 but I'm going to choose what are the headings. First one is VAT, printing expenses, then you have the postage expenses, and then the charitable donations. For you, you'll be able to find out all these expenses are normally a debit entries as well. Why? These are money you're paying out to an expense or a charity reason. That means money going out, it is an expense. On your debt click, expenses are what? A debit entry. So therefore, you're going to simply put those figures down there. 115, 18. Also remember the order, it does not matter. I can use any order I like as long I identify with the right amount. So if I use charitable donation here and use the VAT at the bottom, doesn't matter, it will still work. Now, next question. The following 4 accounts are in the general ledger at close of day on 31st of October. So all the information we got here now, what we need to do, we need to record this into this particular. Remember, 12 marks for this one. But what they're asking you is the one most important, okay? Record the totals and balances of each account in the table, followed by inserting a balance carried down. So this is the closing balance on the 31st of October, and showing what is the balance carried down will be whether debit or a credit, and inserting a total that will be showing in both the debit and the credit column after the accounts has been balanced. So what they're simply asking you here, what was the total? What is the total I'm going to be using on those both accounts? Means when I'm going to finish the account, I'm going to be totaling, isn't it? I'm putting debit side and credit side, I'll put the same amount of total. Then I'll find the balance carried down figure. That is the one they want you to know as well. So here the balance on 31st of October, we have to find out on the first account. It's going to be for drawings account, £3,250. The balance carried down, it will be on the credit side because this is the opposite side. Here I'm going to be recording it. The total I'm going to be using is 3250. Why? Because that is the total I'm going to be using on both. Let's look at the next question for capital. Let me find out the total. The total is 22,875. So I'm going to put it down here, 22,875, because this is the amount I have used as a total. So I'm going to use that here and here. But then I will take away this £350 to find out what is the balance, isn't it? So the balance in this scenario is going to be 22525. Yep, that's 22525. And this scenario, this is going to be what? A debit balance, because this is how I'm going to put it down here. In this side, I will put that 22525 to make sure the both totals are 22,875. Okay, so that is the idea of it. Now we have the loan from bank, so I'm going to use the total is going to be £25,585, and then I'm going to take away 25,585 minus £1,375. That should give me 24,210. Okay, but am I going to have a debit or a credit balance here? Of course, it's a debit balance. Why? Because this is where you're going to put the closing balance, so both accounts will match. And the last one for the least, we're going to find the total by adding those together. 8672 plus 9590. That should give me 28,262. 202 here. And then obviously this time the closing balance is going to be on the credit side. That will balance the account. So you take 140 away, 28,122. Okay, so that will be my closing balance for motor vehicles. So you have 12 marks for this question, guys. It looks so obnoxious, but you have to understand how and what they're asking. Okay, they're asking how to calculate the balance carried on, which is you're absolutely fine, but you need to think you're, like straightforward. In certain ways you say that, but I don't want to say that straightforward, because you're beginners. You're always looking at which side is the most. The balance carried down is going to be the opposite side. Why? That is what is going to be used to balance that both sides. Whichever you do on your T accounts, you cannot progress without balancing the OT accounts. Okay. Now, next one is 1.9. Oh, this question is also a trial balance question. They're asking you to do calculate the total of each debit and credit columns of the partially prepared trial balance. So now what we're going to do, we have to total all of that out. So yeah, again, I'm going to bring my calculator. 118 plus 5,076 plus 61,422 plus 61,422 plus 12,045 plus 6,211 plus 4079. So that should give me 118,951. So 118,951. Okay. The credit side, on the other hand, I have 89,776. Sorry, 476, 1,811, and then you're going to add 22,399. So I have 113,686, 113,686, 113,686. Of course, there's a discrepancy because there is only a partial completed trial balance. So we have 3 more transactions to enter. Okay, so also keep an eye on it because some of them will be debit, some of them may be credit. So we just have to check it now. So they are asking you here to put those into their right side. So drawings is going to be in your debt click on the debit side, or you can say capitals on credit, drawing obviously going to be on the debit side. So I've done that now. Inventories is your asset, your stock, what you got left over. That is going to be something recorded on the debit side as well. Last but the least, purchase ledger control account. It is the collection of all the suppliers you owe money to. So therefore, it's a liability. Liability will be a credit entry. So once you've done that all, now they want you to find out whether you have the right balance. Okay, so first one I'm going to do is the credit side. I'm going to add the 15,200 there. I will have 12886, so 128,886 pounds. But let me see my debit side also matching that column. So let's see that now. The amount I have 118,951, and I'm going to add 3840 plus one more 6,095, and I got it wrong somehow. Let me check. 18886. Okay, let me check. I think I must have done an incorrect entry on one of those initial entries there. So it could be an error. I probably have to recheck again. So see the trial balance come back to help me whether I have done the equations correctly or not. So let me just check whether I have the right amount. Yes, the right amount is on the credit side, but the debit side is not been totaled properly. So let me just go back there and check my debit balances again. So I'm going to bring my calculator up and then start calculating again. 30,118 plus 5,076 plus 61,422 plus 12,045 plus 6211 plus 4079. I have the right amount on that one. Maybe I made a mistake on the second part of the calculation. So let me add for that one 3840 plus 6095. I did have the right amount, but on the second part, I calculated it incorrectly. This one of them, I probably must have done 3540 instead of 3840 because the numbers are next to each other. Obviously, this is the kind of things you may make during your accounting. And then also, this is something you're going to learn how to correct on the next module you're going to be doing, which is the bookkeeping control. So you probably know what I'm talking about when I meant this. Okay, so we've done that all now. We have the names, all the amounts are done. Now the next one is simply to do your debits and credits. So they're asking you here the 6 accounts that will appear in the trial balance, and they want you to whether the balance of these each accounts will be transferred to your debit or credit columns. So what do you now see here? Couple of sales ledger account, couple of purchase ledger account, and some general ledger account. What is the trial balance again? Trial balance is the collection of your general ledger. So these two are irrelevant for me at the moment because these, unless we know these are the only 2 customers and these are 2 suppliers, this will go into your sales ledger control account or your purchase ledger control account as a collective amount, but these are not. Okay, therefore we will only use these 4 or 6 accounts there. The bank savings is an asset for you, so that is a debit balance. Building repairs, it is going to be a expense, is a debit entry. Capital is a credit entry because it's a special liability. Discount received is an income. Why? It reduces the amount you have to pay to your supplier, so that is going to be a credit. And then you have premises is going to be an asset, so that is a debit entry. Purchase returns, purchase is an expense, purchase return, same like your discount received, it is an income. It is indirectly will be reducing the amount you have to pay to your suppliers. Okay, so that is an income for you. So that is the answers for that one. And the last one, of course, we move on to question number 10. Identify which documents would be used for each of the purposes below. You need not to use all documents, and you can remove any line by clicking on it. So if I do something correctly like that way, we can click on it and then remove it. So they're asking you here the purpose, detailing type, quantity, and the cost of goods supplied to a credit customer. What could be it? Is that going to be a statement of account, invoice, petty cash voucher, credit note, or remittance? This is the one we supply to your credit customer, so it's definitely an invoice. Detailing the amounts paid to employees for expenses incurred for a business purpose. So this is internal, so this only can be petty cash voucher because it's not been dealt with customers or suppliers. It's somebody going for a business purpose on a trip, we just probably settle their expenses. This is going to be done by petty cash voucher. Detailing transactions with the credit customer in a given period and advising of the amount to be paid. So this is like a summary, like a statement of account, not a remittance advice or a credit note for this one. Next one. A trade discount is offered to a customer for what? Organization may offer different discounts. This is going to be encourage them to pay early. I don't think that is. To buy goods in the larger quantities, we call that a bulk discount. In order for them to resell the goods at a profit. So that makes sense. Why? Because a trade person will buy the goods for you regularly so they can sell that on. A wholesaler will offer a trade discount to retailers. Why? Otherwise, what is the point of retailer buying that and selling? They're not going to make any profit. So obviously, this is something what we can expecting, because when we give the trade discount, that trade discount can be used as the profit margin for the people who selling the goods. Okay. A prompt payment discount is offered for the customer, obviously, to pay them early. And then we have few more part there. Now have a look at this. Every exam will have this kind of questions. Transactions to be classified into a particular type of income or expense, either is a capital or the revenue version of it. So now here, an amount invested in the business by the owner for you is what? For the business itself, it is a capital income because the money coming into the business, and also this is only happens once in a while, not happen every day. Don't owner doesn't come and give you £10 and £10 and £10 every day. All right, next one. A receipt for rental of spare office space. Okay, so the rental means you probably pay a regular basis, but this is not an investment, it's an expense for you. In that scenario, it's going to be a revenue expense. A payment to a courier to deliver goods to a customer. Sorry, this is not revenue expenditure, it's a revenue income. It's a receipt, means money coming in for the rent. Okay, so every month you receive it, that will be a revenue income. I misread that question. Please read that again. Whenever you have a doubt, read it again. A payment to your courier to deliver goods to a customer, which happens every time, that's going to be a revenue expenditure. The last one, a payment to purchase a motor vehicle, is going to be a capital expenditure, because this payment to purchase a motor vehicle, it is something will be an investment, a capital. You are acquiring an asset which you in turn will be used for a long time within the business. And then again, this is the question I love most. Everyone should see this. A is equal to L plus C. Capital plus liabilities will be equal to assets. Whichever you want to put it, the equation can be twisted around and turned around with the information they've given you. You'll be able to find the missing information. They always give it to. All right. Next one. Let's see that answer for that one. So if your assets are £195,820, and your liabilities are 128,421. How much is the assets? Sorry, how much is the capital? So all you need to do, assets minus liabilities now is equal to capital. So the answer is going to be 67399. So here you go. I'll let you do the last two anyway. But for me, I think I have done enough to pass the exam. I'm simply going to ignore these two. It's all right. I'm not fussed. But what is the important part here, guys, is understanding the underlying concepts, what they're asking you to do. They're not asking you to do complex calculations straight away. They will give you the important parts where you know how to understand the basics. The basics are, put it this way, basics. That means you need to get to the bottom of those kind of things so you'll be able to survive that period of learning the elementary stuff, and then you move on to the higher things later on. And of course, in the questions, I haven't shown you how to flag a questions. Like if I haven't done this question, for example, I'm going 1.4, and what I'll do is simply I'll flag the question. Still loading. 1 second, please. Is that frozen for me? All right, okay. So I'm going to flag, and then I'll move on. I'll see I can't do this question. I'll flag and I'll move on. Normally, if you haven't filled a box, this will still be showing green as well. So make sure all of these colors are cleared. And then also, when you press submit assessment, it will give you a warning. Some of the tasks have been flagged. Are you sure you want to finish this up? So what I'll do, I'll go back to that question. I unflag it, and then I submit the assessment, and then we'll give you a confirmation. Are you sure you want to finish and submit the assessment? So what I'm going to do, I'm just going to click on there and submit the assessment. Let's see what is that coming up as. Oh yes, it says there you have completed this assessment. Congratulations, you have been assessed as competent. I know I'm going to get that, but the questions are presented on a certain ways. It will always going to be twisted and turned, and they will be asking you similar questions there. There's nothing new they can add to those type of questions. You already done assessment 1. Assessment 2 is also another perspective, different type of questions. You have seen loads of the return day books being shown there. On assessment 1, you didn't see too many returns or the discount day books, but now you've seen on this one. So you need to know how to establish which side they will be going into your T accounts from their relevant columns. Okay, so that is what you have to practice again. And then also remember how to deal with your trial balances and how to deal with your invoices. And then of course, there's nothing else you have to worry about. Analysis columns are the one you have to keep on trying. Anyway, the time is almost 1 hour with the video, I think. So I bid you goodbye, and I wish you all the best with your exams, and hopefully I'll see you later on with another video of the next practice assessments for the bookkeeping control in future. All the best, guys, and I'll see you later. Take care and bye-bye.